We're taking a look at the financial New Year's resolutions that a lot of people have been making, but as you can keep them as well, because 2/3 of Americans consider resolutions pertaining to their finances in the new year, and that's according to a survey from Ascent. We have Yahoo Finance contributor Vera Gibbons here with a breakdown. So Vera, a lot of people making these resolutions, what are they focusing on?
You know, it's funny because according to Ascent, I mean, this is a record number of people making financial resolutions this year. And actually, it makes sense that we would be making them given the backdrop that you discussed. We've got potentially a recession coming. People are worried about layoffs. We've got interest rates rising, inflation continuing to rear its ugly head. So at the top of the list, you talked about this at the top of the show, is paying off that credit card debt. Now, at the beginning of the year, credit card rates were averaging about 16%. Now we're approaching 20%. So that credit card debt is becoming increasingly more expensive and will continue to become more expensive in 2023 as the Fed continues raising rates. Also a top priority any year, but particularly this year, is setting up an emergency fund. A lot of people don't have them. We are potentially headed for a recession. We don't know how bad this recession will be, but even if the unemployment rate rises to 5%, we're looking at 2 million additional people out of work. So it's good to have that emergency fund set up, not only in case you lose your job, but also for any other kind of unexpected expense that comes your way, whether you need it for a car repair, a leaky roof, etc. Revising your budget should also be at the top of the list in this inflationary environment. A lot of people haven't taken a more serious look at what's coming in the door, what's going out the door. Time to take a more serious look at that. Make sure you're not spending more money than is coming in. Boosting your retirement accounts also is a huge one. You mentioned that it's been a tough year in 2022. Yes, it has. So a lot of people are discouraged based on the way the market acted in 2022. But don't give up. Keep on contributing to those retirement accounts. Keep on making those contributions as much as you possibly can, at least enough to capture the company match, because that is just free money. And last, I would say, really work on boosting your credit score. As the economy slows down in 2023, we are going to see lending tighten up a bit. So it's really important that if you want to continue to use your credit cards, that you have tip-top shape as far as your credit score goes, because we could potentially see credit card companies, the banks actually making some changes in 2023 as they tighten their standards, as the unemployment rate rises, because they don't want to get stuck with people who cannot pay. They're worried about defaults.
Vera, the third and fourth point you made, certainly going to be key here. When you think about the economic headwinds, reassessing, revising your budgets, what do you suggest in terms of how people keep track of it and stick to those goals?
Well, you know, it's funny because a lot of people haven't taken a look at their budget. They've just been continuing to spend freely, which is why we're seeing the savings rate drop down to that 17-year low. They're spending as if they still have a lot of money coming in. They haven't taken a look at where they're at. They haven't factored in inflation. But so that is a key one for 2023. Now, in terms of keeping your resolutions in 2023, you've got to keep them what they call SMART. And that is an acronym for specific, measurable, attainable, relevant, and timely. In other words, you've got to make them realistic. You've got to chip away at the credit card debt. You've got to take a more serious look at what's coming in the door, what's going out the door. And you've really got to make it a priority in 2023, because I think it's going to be a bit of a bumpy year. We're coming off a rough year, 2023. We don't know what's ahead. Again, as I mentioned, inflation is still very hot. We're headed for more interest rate hikes. So it's going to be sort of touch and go in 2023.
SMART is a good acronym we'll all remember there. Vera Gibbons, as always, Yahoo Finance contributor. Appreciate the time today.